Are we experiencing the death of paper silver? Is the Comex in the process of dying right now? We're going to look at some compelling reasons why that very well could be the case. That physical metal, physical silver, physical gold are taking over from the paper markets. It's incredible what we're going to look at today, guys. But first, we have shocking news, disaster numbers about the United States economy, and we're going to look at the big picture. We're going to look at this from a perspective that makes us very happy that we've decided to protect part or all of our wealth with precious metals, because the numbers and what we're seeing, if we take a step back and think about what we're experiencing ourselves, right, what you're living every single day, but also now even the data that we're getting, it's downright scary. Let's get started on that right after I tell you, thank you for joining me down here in the basement. Please hit the subscribe button. That way you'll get notified every time we go live. Turn on the bell notifications. Leave a comment in the comment section because we want to hear from you. This is not possible without you viewing and without you participating. So thank you, thank you, thank you. Let's talk about the big picture and why this is so great for the precious metals. Here's what we learned this morning, and people are calling this a shocking, absolute shocking report. The jobs numbers came out and it shocked with an unexpected loss of 92,000 jobs. We're going to talk about why that's so important. In February, as unemployment rate also risen. Economists surveyed by Bloomberg had expected a job gain of 55,000 jobs. That's almost a 150,000 job difference. And then they go into all the details, which we're not going to talk about because we got more important things to talk about on this subject matter. We know the U.S. economy is nowhere near as rosy as they say it are. I believe that we could actually be in a recession right now, but I want you to think about what we just learned. And then we got something really important to remember about that number, but that the government is telling us that we lost 92,000 jobs. On top of that, guys, we have skyrocketing oil prices right now in the world. The price of oil has gone from about $62 a barrel up to the last I saw a headline this morning that it was at $90 per barrel. Oil has gone up 35% in a very short period of time. And that's because we have a war going on. So think about that. Jobs being lost, okay? Oil going through the roof. Why is oil important? Because oil is the lifeblood of the world economy. Oil is the lifeblood of the U.S. economy. Oil also, when it skyrockets, puts pressure on inflation. Okay, so you got jobs being lost, oil going through the roof, credit card debt. Okay, Americans are at record credit card debt. I think I saw that like accounts that are over 90 days past due are higher than the great financial crisis. Long-term interest rates, we're going to touch on this more later, have been going up when because of the war they should be going down. And on top of that, we've got this national debt. The whole point, when you put it all together, what we can look forward to, what will happen, and I think could happen sooner as opposed to later, possibly within the next 3 months, is money printing, some form of monetization of the debt, some form of the Fed, our old friend Jerome Powell at the Federal Reserve. Here he is doing all that he knows to do, right, on his last days as being Fed governor, and that will be to print money. When they print money, that makes the value of that dollar go down, and that makes the value of your gold and silver go up. It makes you a very happy basement dweller that you have part or a big part of your wealth protected with gold and silver. That's the big picture. Now, there's something very important we need to talk about the number that came out this morning. The employment number comes from the Bureau of Labor and Statistics. There's some speculation by people on Wall Street, very smart people, that those numbers aren't always all that accurate. I want you to think about it this way, right? Believing the numbers that we get from the government about things like inflation, GDP, and jobs numbers, All right. Believing those is kind of like believing in a timeshare salesman when you're on a vacation, like, like believing what they're telling you. They're going to give the most rosy, massaged vision of what's coming out. And I'm talking about, and specifically, the jobs number this morning. So if think about that. That's the best they could do, is say that the economy lost 92,000 jobs. It's highly likely that things are much worse out there. And let's look at some proof. Enough of me yapping. Let's go look at some proof. Here, another headline quickly. This came from the New York Times. There was their news about the employers cutting jobs, but also gas prices are up. It's everywhere we look. I won't go down that path again, guys, but things are not looking good in the U.S. economy. Oh, and look at this. I meant to share this a couple days ago. This is from the Comex letter. Okay, you think things are good out there? I mean, we're gonna run through this super quickly. These are recent layoff announcements. The U.S. government, 300,000 jobs. UPS, Amazon, Intel, Nissan, 20,000 jobs. Nestle, Microsoft, Bosch, Verizon, Dell, Accenture, Ford, Novo Nordisk, Microsoft, PricewaterhouseCoopers, Dow Chemical, Block, Salesforce, Lufthansa, Tyson, IBM, American Airlines, Paramount, Target, Conoco, Phillips, General Motors, Applied Materials, MasterCard, Kroger, and Meta. I know some people here in St. Louis. There's a big MasterCard facility in St. Louis, and they're talking about everywhere. Things are going to get crazy. But remember, if we take a step back, all right, we can't control what goes on in the economy, but what we can control is how we react to it. And what the government will wind up doing, what the Fed will wind up doing, is printing money. That's all they can do. Okay. All right. If they do anything else, literally the whole system implodes. And again, money printing will be good for your silver and gold. And after that, let's talk about the end of the Comex. Is the end? Will we be having a funeral for the Comex for paper silver? And you know what that'll mean for the price of physical silver. Before we do that, if you want to get your hands on some physical silver, check out channel sponsor First Mint. They are the silver specialist mint in Las Vegas, Nevada. It's the freshest silver on the market because they're owned by First Majestic Silver, who mines the silver, sends it directly to First Mint, where it's transformed into world-class silver bullion products, and then they go directly to you. Don't forget, there's a discount code, VIPRB, and their products are absolutely beautiful. Here's the front side of their Buffalo round. I just love silver. I know you do too. Look at that. I mean, these products that First Mint puts out are truly, I think, some of the most beautiful out there in the silver bullion sector. So check them out, firstmint.com, and let them know you're a basement dweller. Make sure you use that discount code VIPRB. Let's talk about the end of the Comex, maybe the end of paper silver altogether. We've got a lot of data to cover. We're going to run through an article here from Jensen Economics on Substack. Silver market leverage. Hold on here. Now you can see it. Jensen Economics Substack. Silver market leverage increasing distress at major silver exchanges. We're going to go through the Comex, we're going to go through the LBMA, and we're going to talk about China. They talk about how the critical situation in silver right now, and that the physical market is taking over. The physical market is also taking over the fiat-based debt system that's been temporarily kind of in charge here for the last 50 years. But let's focus first on the U.S. silver market. Over the past 6 months, registered silver stocks, the ones available for delivery in New York vaults for the CME, the Comex silver futures market, have been in blue, declining at a rate of 20 million ounces per month, and now stand at 88 million ounces. It's even lower than that now. Note that the 20 million ounce a month vault drawdown over 6 months represents the pace of net silver withdrawals. That's the deposits less the withdrawals from this vault category that has not relented due to the increasing global shortage of physical silver. Over the past 4 days, registered vault stocks of silver have seen 5,694 March 2026 futures contracts, almost 30 million ounces, stand for delivery with 1,900 contracts for 9 million ounces of silver still open for this month. And then they talk about the shenanigans. The available silver at the Comex is getting to rock bottom lows. Okay. Remember that on February 25th, the Comex shut down due to a technical glitch for 1.5 hours. After trading was reopened, it was announced that 31,800 contracts, 160 million ounces, were cleared magically while the market was, quote unquote, suspended or in glitch mode. We know as basement dwellers what really caused the Comex data center to go down was it was overrun by a herd of bulls, silver bulls. Okay. This followed the day after Thanksgiving, Black Friday, November 28th, 2025, multi-hour suspension by the CME, the Comex, allegedly due to server cooling issues, even though it was like -5 degrees in Chicago at the time where the data center is located. No other users of the same data center used by the CME Comex reported any slowdown or problems on that day. Again, it was just the servers that were in charge of processing the silver futures markets. As the silver shortage problem becomes more acute, the Comex silver market is also having increasing problems. Don't be prepared, guys. It's going to be interesting to see the reasons why they come up with for shutting down the Comex as we move into the coming months. London silver. This is the LBMA. The London silver market data published by the LBMA indicates that, this is interesting. London vaults held 226 million ounces of silver at the end of January 2026. That may sound like a lot, but wait, there's more because, however, London market trading ceased for a period of hours on October 10th of 2025 due to no London silver market liquidity, despite the fact that 140 million ounces of silver being in London vaults at that time. He says, thus, we can estimate that approximately 140 million ounces of silver in London vaults is not available to the market and is simply in storage there. So they had 140 million ounces, but they still had to shut the market down. This implies approximately 88 million ounces. That's eerily similar to what's at the Comex registered of silver are available for delivery in the London silver market. The LBMA indicates that the London silver market sees over 780 million ounces per day of trading in its cash spot silver markets on an active day. And again, he's estimating that there may only be about 88 million actual ounces available to back all of that trading. Let's go to China. China's two primary silver markets, the Shanghai Futures Exchange and the Shanghai Gold Exchange. The Shanghai Futures Exchange has open futures claims on 250 million ounces of silver in vault stock of only 10 million ounces of silver. So 250 million ounces traded are claimed, but only 10 million ounces. That's actually lower. We're going to look at that here in a second. While the Shanghai Gold Exchange has about 96 million ounces of silver claims with 14 million ounces of vaulted silver. Shenanigans? Shanghai exchanges have suspended dozens of large silver trading accounts over the past few months as the global silver shortage has seen China's exchange vaults experience a drawdown to extreme levels. Details have not been forthcoming. Now, here's an easier way to look at what we're just talking about from Hugo, and he shares with us the great silver drain. Okay, at the Comex, the Shanghai Gold Exchange, and the Shanghai Futures Exchange. That yellow area that you see shaded on that chart coincides with about October of last year. So again, about 5 or 6 months ago. That white line right there, that's the Comex inventory. That blue line right here that you're following with my red line, that is the Shanghai Gold Exchange, and the green line would be the Shanghai Futures Exchange. Guys, we are likely experiencing, at minimum, major stress in the paper silver markets. But I think it's a safe assumption to say that we could be experiencing possibly the extinction of paper silver, of make-believe silver, of what we like to refer to as fantasy island silver. We got, wait a minute, hold on one second. Excuse me, I didn't understand you upstairs, Susie.
Sorry, super sticker.
Oh, thank you.
And sorry to interrupt.
Oh, you're fine. You're fine. That's our friend upstairs, Susie, my lovely wife and assistant. Yes, for those of you who are new, she communicates via walkie-talkie. She says hi and gives you a high five as well. And it's very important to her that you subscribe to the channel. So please do that. Now, let's get back to more. It's the Comex. We got more information being provided to us in regard to the Comex. And International Stacker pointed this out. Comex Silver open interest is also crashing. Wait till you see volume data here in a second. Preliminary, easy for me to say, data from March 4th, 2026 shows total open interest at close 112,000 contracts. In yellow, this is the lowest levels in over a decade, since 2013, okay? Weak paper hands liquidated, leverage longs flushed out, right? That open interest data is more corroborating evidence to the fact that things are starting to really die down at the Comex, okay? Now, on top of that, we've got Comex volume numbers to look at. This came from Goldfish Chart. I'm sorry. What? Oh, shoot. Hold on here. See if I can find. All right. Darn it. The volume numbers are absolutely collapsing. And hold on here, guys. We're having a little technical issue. All right. We're back now. Okay. I can see you. Hopefully you can see me. The volume numbers are also collapsing. Give me 1 second. I'm going to pull this one up first. Okay. And then we'll come back to the volume numbers. Interesting enough as well, the CME lowered the margins, okay, on gold from 22%, from 9% to 7%. And on silver, they just lowered the margins also by 22%, from 18% to 14%. Why is that a big deal? Because when the Comex wants to put the brakes on the precious metals markets, as you know, that was always one of their tricks they would pull. And they did it a lot over the last few months, raising margins. Now with lowered margins, that may be a little bit at this point of a sign of desperation coming out of the Comex. Let's go see if we can get the latest. Hold on here. Hold on. We'll do this live. You can watch me struggle. We're going to go to the dude. Okay, because not only are they lowering margins, not only is open interest coming down significantly, but if I can find it here we go. We found it. The actual volume of paper traded is collapsing. Okay, well, going down significantly. We know, right, that 2, 3, 4 weeks ago, it was not uncommon to have 800 million, 700 million, 900 million paper ounces of silver traded on the Comex. Now, right, we've got 295 million. It's dropping. Okay, that was yesterday. The LBMA, now he talks about, looks to have had 250 deliveries, and the Comex shows 0 again. The market is coming to an end with low physical inventories. The value of paper silver contracts are going down while physical is going unobtainable, right? And that's what we're seeing. Like we're so trained to look at these Comex and LBMA prices, but the reality is, guys, that they're beginning to lose a big part of their validity. And you know what? While we're at it, let's go out here quickly and get an update on the silver price, which looks to be up in the spot market by $1.60 per ounce at $84 per ounce. Now, let's go to the futures market and see. Okay, the futures market's up $2 at $84.25. But again, something very suspicious when we look at those numbers. in the Western markets, the spot market and the futures market had been strangely close in terms of their price. The futures market is supposed to be noticeably higher in price. That's called contango. That's a normal state of any market. What that means is that the spot price, which is the immediate price for supposed immediate delivery of silver, should be lower than the futures price, because the futures price is for delivery of the metal in 4 weeks, 6 weeks, 8 weeks, whatever the date is on that futures contract. And because people have storage cost and interest on that gold or silver over that period of time, the futures price should be higher. But it hasn't been. It's been about equal, strangely equal. And I think that shows that the paper futures market is almost becoming make believe. Or can you say more make believe? I think more make believe might be the more accurate term. We're going to go to China and look at their vault numbers. It's crazy what's going on there as well. And then we're going to hear from our good friend Rashad and a shocking piece of data out of China, another shocking piece of data out of China about silver. Before I do that, thank you to First Mining Gold for sponsoring Ron's Basement. They are a development stage gold mining company with 2 multi-million ounce projects in Canada, Springpole in Ontario and Duparquet located in Quebec, which I actually visited. These are big multi-million ounce development stage gold projects, which are becoming very, very scarce, in particular in good jurisdictions. And both of those projects are in Canada. And Canada is becoming more and more and more pro-mining. You can learn more about First Mining Gold at their website, firstmininggold.com. Please remember, I'm not a financial advisor. Don't make any financial decisions based on what I say. Always do your own research. And mining stocks, like any stocks, can be risky. Okay, let's head out to China. Woof. Man, it just does not end. And here we go. Hold on here. Now I'm going to bring you there. Sorry about that, guys. Okay. Chinese, this comes from Make Gold Great Again. Chinese silver vaults only have 15 days left at today's drain rate. Just 4 days of global mine output. Comex registered silver, 91 days left at today's drain rate. The Western price, $84. China is paying $98. Okay. They still can't keep the vaults full. And that's the key takeaway here. China is paying a massive, massive premium, right? We just saw the Western price, $84. China's price for silver, $98. China's vaults are almost empty. Even with a $14 per ounce premium for silver, they can't get their vaults full. Someone knows something. And here's the proof from our old friend Oriental Ghost, right? Here is the silver price in the Shanghai Futures Exchange, $98 and $96 on the Shanghai Gold Exchange. Think about that, guys. In China, right? They're paying $14 per ounce more for silver. Oh, I forgot to, we're going to go back and look at the vault data. They're paying $14 more per ounce for silver. And their vaults are getting drained. It's very critical in China based on what I'm seeing, right? This is a very critical situation. Let's go back out there and look at where their vault levels are. Let's get rid of those. We don't want to look at that. Those are the prices. At least in the West, we're getting a deal on silver. This is the Shanghai Futures Exchange silver vault, as I've underlined for you. 255,000 kilograms. There's about 32 or so troy ounces per kilogram. If you multiply that number times 32, you're going to get to, about 8 million ounces at this point, 9 million ounces. Okay. And in the Shanghai Gold Exchange, it's just as critical. So, man, it is interesting times in which we're living. But then we get this again from the Shanghai Ghost. One of China's biggest banks, the China Construction Bank, sells investment grade Panda Silver coin on its app right now for $137 per ounce. Why is that important? Because he notes that 5 years ago, I purchased a silver panda only at 167 Chinese yuan. It's at 910, okay, currently, but he bought one 5 years ago at 167 yuan. It has surged over 440%, 444% over that time period. In Beijing, median free market, prices are even higher. Guys, it just doesn't end. And, because we love him, we love his optimism, we love his analysis. We know that the silver price should be way, way, way higher than where it is right now. Don't forget, we've yet to see the silver squeeze. What we saw over the last 6-9 months was a silver squeeze, kind of a semi-squeeze, like when you're.
Question from a community member.
Okay, what's the question, Susie?
How do you think the price of oil going up will affect silver and gold? Shouldn't this push the precious metals up?
Yes.
From Linda.
Yes. Okay, Linda, I'm going to get to your question. Okay, Linda. Yes, we're going to talk about oil skyrocketing and what that will do to the silver and gold price. That's a great, great point. I'll get to that. Yes, we've had a silver squeeze. We got to remember, don't get mad at me for telling you this. We don't want the silver squeeze, the real squeeze, to happen anytime soon. Okay, because silver just right now on its physical fundamentals has so much higher to go, right? We want the silver squeeze to happen maybe 6 months from now, maybe 9 months from now, when the silver price has been steady at around $120 or $150 per ounce, even at $100 per ounce. We want that platform from which the squeeze occurs to be much, much higher. I believe 100%, yes, right, that we're going to have a silver squeeze. I'm more interested in long term. And even after that squeeze, right, the silver price will consolidate at even a higher level. We're going to get to Rashad and talk about what he sees happening in the near term with the gold and the silver price, more focused on silver. But before we do that, Linda had a great question about the price of oil. The price of oil going up will make inflation go up. The price of oil going up makes the US dollar less valuable because, the amount of oil that you can buy right now with one of these, which would be what? About, here's a great way to think about it. About 2 weeks ago, you could buy about 1/60th of a barrel of oil with this. Think of a big barrel of oil and you can buy 1/60th of it. Today, because the price of oil has gone up based on US dollars, if you're using the US dollar, you can buy only 1/90th of a barrel of oil. You feel it. I feel it every day, right? I just drove by my local gas station last night. Gas was $2.60 just a week ago, basically. Now it's $3.10. My dollars are becoming less valuable when you're looking at oil, because oil is the lifeblood of the world economy. When the price of oil goes up, it has a major impact on inflation. And at the end of the day, right, when all the little noise is filtered out, when inflation goes up, that is absolutely a positive for the gold and silver price. There might be some noise in between, right? But if you look at it on a long-term basis, and I think the price of oil will only continue. We may never see $60 oil again. I could be dead wrong, but I hope that answers your question, Linda. Now, let's go take a look at Rashad, and then we got even more to cover. Hold on 1 second here. Mr. Rashad, I love his analysis. Good guy. I believe in very good times for the precious metal sector is just around the corner. Once the present declining cycle ends, we are in a bit of consolidation here, which I believe is either done or about to be done. An impulsive advancing cycle in metals and miners is going to be the case, just as previously one could see in the example of junior miners SILG. So here he is looking, this is the SILJ. This is the silver miners, and the silver miners will strongly and generally move in the same direction as silver and gold as well. And what he's talking about here, you can see, right? We've had consolidation phases, consolidation phase here, consolidation phase here that we're in right now. And he foresees a big move up. Let's pull up the silver chart here real quickly. Get that on the screen for you. This is the silver futures chart for May. Okay, so this is the Comex for May, still up about $2. And we're looking at a 6-month, let me get the markers out. This is a 6-month chart, okay? Now, right, remember, that was not a squeeze. That was a squeeze and kind of a little parabolic move at the end. What I want you to focus on, all right, is that basically here we have been, get the lines, there we go. We have been consolidating in this area ever since. Okay, let's say about 75, and we popped up here into 95. If we can continue to consolidate in this area, which I think we will, I'm getting more and more optimistic that we can consolidate. And as long as it goes, we're fine. Okay, guys, we got $84 silver. We got $75 silver. Think back a year ago right now when we were down here in the basement together, basement dwellers, and we had $34 silver. We had $32 silver, right? A year later, we've got silver more than double the price. If we can consolidate here for a while, and why do we want to consolidate? Because anything that goes straight up, straight up, straight up always has major corrections. If we can consolidate here, and what consolidation achieves is the short timers, the people that aren't really wanting to invest in silver on a long-term basis, they give up, they say goodbye. The new people or the existing people who buy more come in, who've got a lot more conviction. It builds a solid foundation. It's all a market of buyers and sellers. So when you weed out all the weak hands, maybe some of those sheeple who just temporarily joined us, or the short-term traders, they get replaced by people that believe in the long-term story, the long-term thesis of silver, and it builds this base from which we can go much higher, and eventually we will get that long sought after squeeze, which could bring us to levels that we just, that we just only dream about at this point. I want to go out and say thank you. Looks like we got a super chat from Renee. Okay, hold on. I want to say thank you. And then upstairs, Susie has something she wants to say. Okay, but Renegade Designer, hopefully I'm pronouncing that properly. My eyesight, yes, Renegade Designer 8643. I'm loving what you do. Thank you. I love you. I love the people in this community. All right, it makes it fun to be able to be down here in the basement and spend this time with you. Now we're going to go in with the real boss of the basement, Spot Silver Susie. Okay, because she only looks at the spot price and see the question. Hold on here. Spot Silver Susie, do you have a question? Over.
Yes, Francis would like to know, considering what's been happening, if you had to take a guess, what do you think the eventual floor price of silver would be?
Yeah, okay. Okay, thank you, Spot Silver Susie. Francis, that's a great question. I kind of just talked about it, but since I love to repeat myself, I'll say it. I think the number that comes to mind, the floor, okay, that I would say, and look, nobody has a crystal ball, you know, all that good stuff, but the floor, based on, I look at charts, I'm constantly analyzing, and I've been doing it for decades. My gut feel, given everything that's going on in the world, you got to think about things like the war that's happening, the uncertainty, right? The level of debt in the world, the fact that the U.S. economy is kind of in the pooper right now. See that right there? You may not know that, but right behind my head, I've got a toilet seat hanging. Some people might say that's because I'm full of you know what. But anyway, when you consider everything going on, the kind of like I would be very surprised, Francis, if the price of silver gets below $72. I'm thinking that we're going to build this base in that 75. I'd love it to be 85 range, no doubt about it. If it gets below $72 per ounce, I personally maybe start to get a little concerned. If it gets below $66 per ounce, which I think there's maybe like a 10-15% chance of that happening, then I get a little more concerned. I give up. I surrender, right? I zip my lips, and I come on here and eat crow, and nothing's out of the realm of possibilities. But I just can't see silver getting into the 50s again. I really, really can't. So, hey guys, I think we're in for a great time ahead. And I mean, where else? I had this conversation with some very intelligent people, very credentialed people in the world of investing that know a lot about what's going on in the financial world. And we almost always come to the same conclusion. It's because we'll talk about, people say like, Ron, when are you going to sell your silver? When are you going to sell your mining stocks? I'm like, I don't really ever sell them. I don't have any plan because of this key critical thing. When I evaluate other places where I don't want US dollars. Are you going to sell silver and gold? And what are you going to get? You want these? Huh? I mean, really? Where is it? Really? Huh? Let's do a little silver show and tell. Isn't it beautiful? I mean, look at that. Honestly, you're going to trade that for some of this stuff? Are you kidding me? The available options, am I going to put money into the stock market, into like Apple stock? No, right? The outlook for the precious metals, I think, remains so crazy optimistic. The other thing that encourages me is you, okay? Because remember, I used to have it. I've got it. I'm going to show it to you for a second. The people that are in Ron's basement, the basement dwellers, are some of the smartest people out there. Right? The level of analysis, right? The level of willingness to dig in and learn and look at the big picture, not just believe what CNN tells me, right? That kind of stuff. No, but people who are willing to dig in, do analysis, and do it in an objective way. Do it not inside a bubble. I love when people disagree with me. It gives me an opportunity, gives us an opportunity to learn. But the fact that the smartest people in the room, think about some of the people that are in precious metals: Rick Rule, Andy Schechtman, Keith Neumeyer, the list goes on and on. Lynette Zhang, David Hunter. I mean, these are smart. You and me, and I'm going to prove it how smart you are right now, because get this, right? Look, as a quote unquote relatively successful YouTube content creator, I get all kinds of information provided to me from Google, who owns YouTube. And look what they said when they analyzed my audience. It's right here. It's highlighted. That yellow part, but I'm going to read it to you. It says, you can tell this to your partner later today, spouse, whatever. Your audience in Ron's basement is highly sophisticated, focusing on the underlying mechanics they believe are driving the market. The underlying mechanics, piecing things together. This goes beyond simple price action and points to a desire for deep dive analysis. When you got all the smartest people together, right, helping each other and coming to the same basic conclusion, guys, that makes me feel great about what's going on right now in the world of precious metals. I feel even greater to know you, and I feel really honored that you joined me down here in the basement. I'd love for you to come back. Don't forget, subscribe. Thank you so much. Have a great day, and I'll see you. And yes, I see you. You're important. You're special. I'll see you next time. Have a great day, and bye-bye.